What is up, guys? My name is Darren Jackson. Welcome back to the channel. Thanks for stopping by. And today I felt like would be a great opportunity to talk about more ETFs, specifically 3 of my favorite ETFs that I'm holding on to today. Also because, unfortunately, there was no more news on Metamaterial, Torchlight, or FRX. I can't really talk about those right now, so we're going to talk about this today. Of course, I'm not going to assume that everybody knows what an ETF is or why it's even beneficial for any investor to hold on to. So I'm going to briefly talk about what an ETF is. But of course, a lot of you guys already know what they are, so I'm gonna leave timestamps below, so feel free to skip through. Otherwise, the average watch time is super beneficial for my small channel, so maybe you wanna stick around and watch. But otherwise, let's get straight to the point. So an ETF stands for an exchange traded fund. It's essentially an index fund, but it can be traded just like a regular stock within the stock market. But unlike a stock, which is a representation of one company, an ETF is a representation of multiple companies. You can think of it as a basket full of stocks, and they're either going to share the characteristics of being from the same index fund, such as S&P 500 or the NASDAQ or the Dow, or they're going to be part of the same sectors, such as bioscience or technology or consumer cyclicals. So you can already tell from that brief definition why I love ETFs. I feel like they're super beneficial for any type of investor, whether you're brand new, someone that's kind of experienced like myself, or someone that's been doing it for decades, because it automatically diversifies your portfolio by putting every single dollar that you put into that ETF into a multitude of stocks, which could limit risk and limit volatility. But also, based off my experience, every ETF that I've invested into pays some type of dividend, which is super beneficial just for making some extra money just for holding that stock. And it's super beneficial for today's topic because we're going to be talking about 3 of my favorite growth stocks. So not only are you getting growth stocks, but with at least 2 of these ETFs, you're making some additional money off the dividends. So now that we know and we're a little more confident on what an ETF is, let's talk about my 3 favorite ETFs. So the first ETF is an ETF that I've recently talked about. It's from the ARK family, led by and managed by Cathie Woods, who is an icon right now in the stock market. And that ETF is ticker symbol ARKF, which is the ARK FinTech and Innovation ETF. Now, ARK funds are made of families of ETFs that invest into companies they believe are disruptively innovative. Disruptively innovative, pretty much in their definition, are companies that are blurring the line between 2 different sectors. For example, you may have companies within biology and technology or biotech. And for this example, it's investing into companies that are within finances and technology, or fintech. Now, I'm going to put more of the definition of ARKF over to my side. It's also going to elaborate on some of the many sectors within this ETF. But the top 2 mini sectors that made me the most intrigued to invest into this ETF are going to be transaction innovation and blockchain technology. Now, with all that being said, some of the top sectors within this ETF are going to be companies like Square, which is actually their #1 overall funded company within this ETF, and other companies like PayPal and Shopify. Now, you can already see some of the similarities with these 3 companies. They all have a lot to do with transaction innovation by giving you the opportunity to purchase items online, or specifically with Square, you can use either the little square that you swipe with or the little machines at small businesses, and they all benefit companies from small businesses that are even available just online to your big brick and mortar companies. Now, Square and PayPal each own companies that allow peer-to-peer transactions, including Square owning Cash App and PayPal owning Venmo. Additionally, Square and Venmo allow you to invest in cryptocurrencies, which gives you opportunity to invest in cryptocurrencies such as Bitcoin and other altcoins like Ethereum. Now, if you're a true believer of the future of cryptocurrency, what it can mean for global remittance and just it being a decentralized form of currency, then you really want to make sure that you're investing into companies that deal with blockchain technology, considering that transactions with cryptocurrencies are verified and stored and read within the blockchain. And that's pretty much to the extent of my knowledge of blockchain technology. Now, with some of the financial details with this ETF, its PE ratio is 150, which is considered overvalued. That seems to make sense just because ARK funds are really talked about and its volume of trading is super high. I feel like it is correcting itself as we speak, so it definitely gives you more of an opportunity to buy it at the cheap. Its expense ratio is 0.75%, which is fairly high, but considering that this is an active researched ETF and you have people behind the scenes consistently making sure that the funds within this ETF are the funds that belong in this ETF, you're gonna have to pay the price for that, but I think it's really beneficial. Now, I did say that the majority of ETFs, in my personal experience, pay a dividend, and this one's a little confusing, and I've said that before on the ARK video that I made. If you haven't checked that out, by the way, I'll definitely leave a little link up above and a link down below, so make sure you do that. But according to Robinhood, ARKF has a dividend yield of 0.17%. But according to MarketWatch, its last dividend payout was 3 cents, and its dividend yield at this point is 0. So I think it's safe to say that if you're looking to invest into ARKF, don't invest into it for the dividend yield, invest into it for the growth. As a matter of fact, it's actually grown almost 150% over the past year. Even if you zoom out even further to the past 5 years, it's grown even more, despite the fact of what the pandemic has done to punish practically every stock within the stock market. The growth alone is why I considered investing into ARKF, and why you should at least consider looking into it for an ETF. You can put your funds in and let it grow over a long period of time. The second ETF is ticker symbol VTI, which is the Vanguard Total Stock Market ETF. It's pretty much what it sounds like. If you look at the definition, VTI is an ETF that covers virtually every single stock within the stock market, which immediately shouts out diversity and limiting the amount of risk. With the exception of external situations causing the whole stock market to drop, overall this ETF will consistently grow. So I'm pretty sure that this ETF is a market cap weighted ETF, which explains why its top sector is in the technology sector, and its top companies consist from Apple, Microsoft, Google, and Amazon, and even a company like Tesla. Now, I think that alone is really beneficial because Tesla is a highly talked about company and a highly tradable company that has a lot of rapid growth and a lot of volatility. So if you want to avoid the risk of the volatility and what that can bring to you, it's really beneficial to be able to invest in an ETF like VTI that has its 7th most funded stock within the ETF being Tesla. So you can put some money into there and automatically have it go to other stocks. So I really think that alone makes VTI a really cool ETF to invest into. But aside from that, it does have a PE ratio of 55, which makes it slightly overvalued, but again, it encompasses the entire stock market, so it's just going to vary with the stock market at that period of time. It does also have an expense ratio of 0.03%, which makes sense because there's not a lot of research that needs to be done because it's just the entire stock market. And that only means you're spending $3 a year in expenses for every $10,000 you invest into. So that's virtually zero, which is really amazing. It also has a dividend yield of 1.36%, which is about 64 cents per quarter per share, which is really cool because on top of the growth that it has of over 50% over the past year, you're making an additional 64 cents every single quarter for every share that you have. So double dipping, another reason why I love VTI. Now, the third ETF on my list of top 3 of my favorite growth ETFs is ticker symbol QQQ, or the power shares QQQ. I'm really gonna try to limit the amount of times I say QQQ just because it's just weird. But this ETF is essentially a modified version of the NASDAQ 100. Now, the NASDAQ 100 is an index within the NASDAQ index that tracks the top 100 market cap stocks within the stock market that are non-finance. And that's a really big hint on what the top sector is within this ETF, which of course is technology, making its #1 stock, of course, Apple. And it also leaves other companies such as Microsoft, Amazon, and Tesla. Tesla in this ETF is actually the 4th most funded company. And that's also still pretty cool as well, especially if you're even more of a believer within Tesla, but you're still wanting to limit the amount of volatility within the company itself. So you can invest into a company like QQQ over VTI because you're increasing your amount of risk slightly, but still not as much as if you were just to invest in the company altogether. Now, with this company, it does have a low expense ratio of 0.2%, which means you're spending $20 for every $10,000 you spend on a yearly basis, which for this list is still fairly low, but also has a low dividend yield of about 0.7%. So this is almost like an ETF where it's all about the growth, but on top of that, it just happens to pay dividends. Speaking of the growth, over the past year, QQQ has grown over 68%, which again is amazing. And if you back up even more, you can see that even though it took a pretty nice pitfall due to the climax of the pandemic, it dropped down to $170 per share. but it skyrocketed well beyond that within a couple of months. You had an opportunity to invest around that all-time low of $170 and experience dramatic gains, showing that right now it's a little over $300 a share, approaching $350 a share. So that alone, and just the 1 year overall growth, shows that it has a lot of potential for a lot of growth in the future, especially with the future of technology as we know it. But guys, that's just my opinion on my 3 favorite growth ETFs. But let me know, what are your favorite ETFs, whether they're because they have a lot of growth opportunities, because they pay a lot of dividends, maybe they even pay monthly dividends. I actually heard about a weekly dividend paying ETF from a good friend of mine, Jacob Fisher. I'm not really sure how I feel about it. Maybe it's another video opportunity, but again, that's another video for another day potentially. Speaking of other videos, make sure you guys watch some of these other videos that I hope help you guys on your investing journey as they have in mind. I appreciate you guys watching, and until next time, take care.